following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. Thank you for joining us today. We're on 94.1 FM, WNBU in New Bern, North Carolina, as well as Cable TV 10, also in New Bern. We welcome all the viewers and listeners out there on those stations, as well as those of you streaming our video or audio from our website, dlblain.com. Most of the ideas and topics for our show come from you, our viewers and listeners. So if you have any topics that you'd like us to address or questions on things that we cover, feel free to give us a call at 252-633-0107. Our email is allthingsmoney@dlblain.com, and our website is www.dlblain.com. So once again, we love to hear from you. Also, we do on our website, we post archives of the show about a week after we're done. So if you miss a week, or a lot of times I'll refer to things we talked about on other shows. If you want to go back and listen, just go out there to the website. There's a lot of good information on our website. In fact, the first topic I wanted to touch base on is a little bit of a follow-up on last week. Last week we were talking about the President Obama's proposal to create jobs, another, I think, $400 or $500 billion stimulus, among other things, a collection of policy changes including payroll tax cuts, unemployment benefits extensions, infrastructure projects, and things like that. Let's talk about those for a minute. The payroll tax extension, currently workers are receiving a reduction in the Social Security portion of tax that they pay. Well, President Obama's proposal, which I was saying last year they should have done, is that this also extends to the employers, as well as any new hires that were unemployed that a company employs. They'll be exempt from Social Security and Medicare tax. And so that would bring, the President's proposal would bring the combined percentage of tax, the employer's portion, down to 3.1%. One of the things that people don't realize is that for a lot of the lower income taxpayers, the payroll tax is actually more the largest tax bill they have. Between Social Security and Medicare, it's 7.65% of their wages, and there's virtually, other than deferring into a 401k and pre-tax, there's a couple of other things, a couple of pre-tax, but for the most part, there's no way to avoid that, because even if you defer into the 401k and things like that, they're not income taxable, but they're subject to Social Security and Medicare tax. And so there's just not a lot of ways to avoid Social Security and Medicare tax. And so for middle to lower income taxpayers, it's one of the largest taxes that they pay. Most of them don't pay any income tax. So anyway, one of the things that they did last year, or maybe it was 2 years ago, was cut the payroll tax for employees, but they did not adjust it for employers. Well, President Obama proposes to do that this time around. And also any new hires that companies hire off of the unemployment rolls, there will be no payroll tax on those people at all. A couple other things that are in the proposal was to especially individuals adjusted gross income of more than $200,000, or couples making more than $250,000. They're proposing to change the income tax rates back to 36% and 39%. It would also cap itemized deductions at 28%. And these are proposed to start in 2013. So things like charitable contributions, mortgage interest, those type of things for higher earning taxpayers would be capped at the 28% level. This kind of goes along with the sort of populist thing that somehow the rich are going to bail us out of this financial problem. And as we've talked about before on the show, there's just not enough money, all the wealth in America to fix the problem without broadening the tax base. Just look at California. Years ago, they were so reliant on the people from Silicon Valley and the Hollywood folks and their budgeting. And when those people either moved out of the state, number one, or number two, weren't making enough, California had all sorts of budgetary problems. Anyway, some of the other things that are in the president's proposal: to eliminate the carried interest, which is a portion of money paid to managers of hedge funds and investment partnerships that currently is eligible for capital gains treatment, to tax that at ordinary income. And this is where a lot of the, when you hear, we'll talk about this in a little bit, Warren Buffett talking about, millionaires and billionaires paying less than secretaries, sometimes this is where it comes in, is if you're a hedge fund manager and you make, $2 billion or $2 million, whatever it may be, in a year, a lot of times that is taxed as capital gains instead of ordinary income. It's called carried interest. I don't want to get into the mechanics of that, but you've got to be a pretty high-earning hedge fund manager or partnership manager to fall under these rules. So one of the proposals is to eliminate that and subject this carried interest to ordinary income rates. The other thing, couple of things: repeal oil subsidies and impose less generous depreciation on corporate jets. I mean, these things are just sort of nibbling around the edges. Once again, we're not really reducing any spending, so I'm not really optimistic that any of this will solve our debt problems. We've got to reduce our spending. We've got to get out there and create jobs. I was with some folks in North Carolina. You're probably familiar with the Golden Leaf Foundation, and I was talking with some folks from that a couple weeks ago, talking about job creation, especially in North Carolina, where our main industries a couple years ago were textiles, tobacco, and furniture. And I think furniture may be hanging on a little bit, but so much of that stuff comes from the Far East, where woods are really cheap, and of course textiles are all gone, and of course tobacco, it's a crime practically if anybody smokes anymore in the United States. So the three big industries in North Carolina have basically been destroyed over the years. And so to create jobs in our state is going to take some really forward-thinking people. Well, we're coming up on our first break here, so when we come back, we'll continue talking about this a little bit, as well as move on to some year-end tax strategies. So for All Things Money, I'm your host, David Blain, and we'll be right back after a few short messages.